new people because I know some of you are fairly new, so I want to get that out of the way. Okay. This video is going to be just about the bullish reversal candlesticks. When a reversal is about to happen, you might see certain patterns that candlesticks make. That common ones is the bullish engulfing, and like I said, this video is just about the bullish the bullish reversals, so that way nobody gets confused. And I cannot teach to save my life, so okay. And I can draw, but I cannot draw in this stuff. It like sucks. Okay, so a bullish engulfing would look like this. Okay, so this is a bullish engulfing. But bullish engulfing, what you'll see is that the previous when I see the previous candle, I'm talking about for this video per se, I'm gonna do, you know, a red candle and then a green candle, so you guys don't get confused. So when I say the first candle or the red candle or the bearish candle, that's this candle right here, and my second candle, that's this candle right here. So with bullish engulfing, what you're gonna see is the first candle, the red candle, and then you're going to see a second candle, the green candle. The second candle will close higher than the body of the first candle. To start off, maybe I should give you guys a little background. So you have this candle right here. Okay, this is a candle, okay? This is the body of the candle. Okay, look at this. This is the body of the candle, okay? And you have your wicks. I'm going to explain what the wicks mean. This would be where the candle opened, and this would be where the candle closed. And with this would be how high the candle went right here, and this would be how low the candle went. So you have the body of the candle, you have the wicks, you have where the candle opened, and you have where the candle closed. So the wicks means that, okay, so this is how high the candle went. The wick means that this is the rejection. The wick is basically a rejection of the prices, whether it was the higher prices or the lower prices. As you can see, this candle, it went down to right here, and it rejected the lower prices, and it went back up right here, and it closed right here. So right where it closed, you would have another candle that's forming right here. Okay, and say that candle closes right here, where it closes you would have another candle forming. So, you know, unless the market closed and it opened back up again, then you might have a gap. Right here, this is an example of a gap, okay? You have the piercing pattern. The piercing pattern is similar to the bullish engulfing, but the piercing pattern closes 50% or more of the previous candle's body. So, okay. So you have this candle right here. Okay, you have this candle, and you would have most people get the piercing pattern confused because they see, well, you have a red candle, but the green candle didn't even go past the red candle. So how could that mean? How could this indicate that, you know, a reversal happened? Well, the bullish candle, the second candle will close 50% or more. Is that the bulls are getting stronger. The bulls are gaining momentum. Okay? And then next you have what is called the hammer. The hammer would look like this. I don't know if you guys watch Thor, but just think Thor's hammer. Okay, the hammer would look like this. And this is a wick. Like I said, the wick is the rejection. Let me give you a view how that would play out, okay? You have a bear candle, okay? And then you see it like this, okay? And then you might see it like this. Okay, so this is where the price was originally at. And then you have your wicks, meaning that it rejected and it went back up to right here. The price rejected, it rejected the lower prices. And you have this one, it rejected the lower prices. Same thing with a rejection of the higher prices. It would just look the opposite. You have your candle and then you have the long wick, which means that it rejected the higher prices, it went down. This right here would be called a shooting star, a shooting star. But I'll keep that for another video if I do it for bearish reversal patterns. But just for now, I'm going to keep it bullish reversal patterns so nobody gets confused. Another, so I have the bullish engulfing, I have the piercing pattern, I have the hammer. Like I said, the hammer is rejection of the lower prices. New prices are forming. Bulls are starting to get in control. And then you have the tweezer bottom. Tweezer bottom looks like this. And this ties up to what I said before about it rejecting prices. The tweezer bottom, what it basically means is that, okay, this candle, I don't know if you guys can, hopefully you guys can see my mouse. This candle, it went all the way back. It was all the way down here and it rejected, it went back up, okay? And the next candle, it opened bullish, but it went back and retested the lower prices of the previous candle. So this candle was all the way down here. It went back to retest it, what the first candle could not do, and it rejected again. So that's what that means. And then you have okay, so you have the bearish engulfing, the bullish engulfing, the bullish engulfing. You have the hammer, you have the piercing pattern, you have the tweezer bottom, and then there's one more. Just to review really quickly. Okay, so just to review, you have the bullish engulfing. You have the bullish engulfing. You have the piercing pattern. You have the hammer, Thor's hammer. Well, the hammer actually looks like the hammer, so that one's, you know. And then you have the tweezer bottom. Okay, so I mean, an easier way to remember this is, let's see. Bullish engulfing, okay, you have a red candle, you have a green candle. The green candle closes higher than the red candle. So that's your bullish engulfing. You have a piercing pattern, you have a red candle, and then you have a green candle. The red candle closes the green candle closes 50% or higher than the previous candle, which is the red candle. And then you have the hammer, which is a green candle, small green box, and then a long wick. Price rejection of the lower prices. And then you have tweezer bottom, which looks like two boxes next to each other, and then you have candle went down and it rejected the lower prices. The second candle went down to retest the lower price of the first candle, and it went back up. So am I missing anything? And you guys can ask questions. I do not bite. So. And what I tell everybody with trading, always, always, always control your emotions. Don't try to take revenge if the trade is not going your way. Always trust your trade, because like I said before, a trade, you make a trade, you serve your analysis, and it went the opposite way. Don't be so quick to close your trade and say, oh my God, my analysis was wrong. There will be drawdowns, it's not always going to go your way automatically. There will be drawdowns. So patience is key. So always be patient with these trades. But these are the few that you might see. Let me see if I can spot some. AU, like I predicted before, it's still bullish. Let me just stick to the bullish reversal. Oh, and okay, that's the one I was trying to remember. You have a Morningstar. Sometimes you might have dojis in between. The doji simply means that the market is indecisive at the moment. It could go either way, A Morningstar would look like this. A Morningstar. You have your red candle, right? A strong bear candle. And then you have a doji. Doji simply means the market is indecisive, meaning that it could go either way. And then you have a bull candle, a green candle. Okay, this is called a Morningstar. What it's saying is that, bears were in control and the market became indecisive. It could go either way. And then you have another green candle, which means that bulls are starting to be in control, and it's a strong bull candle. So if I see something like this, I would wait to see what my next candles will do. So my next few candles, if my next few candles are green and, it's an upward trend, then of course I will be putting a buy. But my buys, I will look at everything else, my indicators, so on and so forth before, I get in the trade. You want to look at all these little factors before you get in the trade. You don't want to just, jump in the trade. So the last one is a Morningstar. So we have the bullish engulfing, just to be quick review. The red candle, and then you have the green candle. The green candle closes higher than the body of the red candle. And then you have your piercing pattern, the red candle, then the green candle. The green candle closes 50% or more than the first candle. And then you have tweezer bottoms, two, you can call them, just to get a picture, you could say two candles that looks like boxes. And then you have the line on the bottom, which means, which is the wick, which means that it rejected the lower prices. Both candles rejected the lower prices. The second candle went back to retest it, but it rejected it. And then you have a hammer. Thor's hammer. Thor's hammer rejected the lower prices, you know, went up. And then you have the Morningstar. Bears were in control. The market became indecisive. You had the doji in the middle, the little small cross, and then you have a bull candle, meaning that buyers are starting to get in control. Buyers are starting to get in control of the market. And then feel free to ask questions, you guys. Like I said, I don't bite. I can't teach, but I can't teach. All right. All right, guys. Have a great one. Enjoy your trading day. Like I say, be patient. I might make another video. Be patient. And enjoy trading, you know. Set it and forget it. Yeah. Set it and forget it. All right. Have a great one, you guys.